Welcome to Framework Fortune and welcome back to all of you from the great Framework Fortune community. Appreciate all of your guys' support, and if you're new to the channel, this is your first time, if you learned something by the end of this video, maybe think about subscribing and teaching that dirty algorithm a little lesson and jab it right in the like button. So anyway, let's dive in. I'm your host Ben, and we're going to be talking about the criteria that I look for when trading stocks. My number one criteria is volume. Looking at this chart, you can see that VXRT has had plenty of volume in the last 4 days. You've got to have volume. That's the amount of shares being traded in the time period. And volume means liquidity, so you can get in and out of positions fast. So if something goes wrong, you can save your account, or if something goes right, you can lock in a quick profit or maybe even a big profit. So when I scan in the morning, on my scanner I have the volume button, which I do have a setup video for Thinkorswim and one specifically for the scanners. But I want to look for stocks that have at least 500,000 in volume in pre-market. Just from this one example of VXRT, you can see where no volume back here equals no trades at all because there's not much movement. And now big volume, we have VXRT running from $5.63 up to $11 in 4 days. Now the number two thing I look for is a catalyst. Do we have PR? Do we have any type of good news? Well, if you look over here at VXRT, when this started to run, they had some PR here. They appointed somebody to the board of directors. He must have been somebody really good. And today you see this PR. VX shares are trading higher in anticipation of the company's presentation next week at the World Vaccine Congressional hearing in Washington. So we have some type of catalyst. That is some good PR. They've got anticipation. They've got excitement. That's why you need the catalyst. You need a reason to be buying or selling a stock. Now there's a lot of different things that can be catalysts. You see a lot of big rips on FDA approval, positive phase 3, positive phase 2, positive phase 1 and 1B trials and all of that. You're not going to get too much action on normally. Sometimes you can, but for the most part, not really. Exclusive rights to something, or if they acquire something, if a company is acquiring something that is a nice investment, that is going to give them more revenue streams, mergers and partnerships and agreements with other companies. They're networking, working out deals. Here lately with all the crypto hype, there's been a lot of crypto stocks that are getting some pushes up because of all the PR that they're having. Companies that are staking Ethereum and other coins and tokens, or trading them, or exchanges like Coinbase IPOing. IPOs are not always a good thing. While I'm mentioning those, it depends on how the IPO opens up. You still have to think of the value of the company. If the IPO opens up too high because of the inside investors who get first dibs, then you can have a problem there, like we saw on Coinbase. Coinbase got way too high by the time the IPO price came out. It did have a quick pop right at the beginning, but we saw several days where it sold off. So you don't want to just hop in IPOs to hop in them. You want to do a little research on the IPO first. Go check what the company's about and try to get a valuation from their older financial statements, balance sheets, and see if it's actually worth the price that you're paying. Sometimes companies will IPO lower than their valuation, and those are good opportunities to get in because they are letting you know, hey, we're IPOing on the market at a lower price, so come and buy some of these shares at this discounted price. And of course, that will excite traders. So there's a lot of little nuances with the PR that you'll learn with experience, but always just look for those ones with the high volume in PR. Probably the third thing is some type of pattern, like some type of trend line, some type of triangle, some type of U shape. Right here in after hours, VXRT made a nice U shape and had to break out all the way up to 1224 there. So far with VXRT, we've got the PR, we got the catalyst, we've got the volume, and we've got chart patterns that are happening consistently. Multiple U-shapes, cups and handles, triangles on these charts. So you're getting nice healthy stock movement. Most of the time I like to try to trade stocks on an uptrend. So that is a specific thing that I look for, because if they're on the uptrend, they're more than likely bullish and going to continue on the uptrend. Now, another thing I look at is the daily chart to see if we're running into any resistance. You can have a stock that is looking very bullish, but if there's any past chart resistance, like right here in this $11 area, you can get hung up in one of those areas, even though this thing is above all indicators and bullish right now. This could have a pullback after this initial run up here, and then it could continue on this little steep uptrend that it's on. The final major thing that I look at is the stock float. There is a video specifically on stock float on the other channel, a 1-minute quick video that explains what that is, but basically float is the amount of shares offered to the public, me and you, the retail traders, what we can buy and sell. And I like companies with low floats or lowish floats, because the less shares out there, that means low supply. When you do get a catalyst, chart pattern, volume, all of that, it's going to push that low supply with the demand up in price. It's basic supply and demand. When you have way more demand than supply, then you're going to get huge price spikes. Back here on VXRT, when it went on this massive run, there was way more buyers than there was sellers. So you get a nasty rip on this from $9 all the way up to $25, because it is a lower float stock. VXRT is around the 100 million mark, which is not a lot of shares, but I like even lower than that, like 5, 6, 7 million, where they're going to have a lot of volatility, so you can get some big runs. But they are risky. The lower the float is on the stock, the harder it can be to get in and out of those plays sometimes, and they can just drop or shoot up without any notice, because it only takes a little bit of buying or a little bit of selling to get those moving. So if you combine all that together to build your watch list in the morning, and then keep an eye on the stocks that meet these criteria, then you have a narrowed down list that you can work from to see where the best opportunities are going to be. Instead of having to watch a whole bunch of different charts, you may just have a watch list of 4 or 5 stocks, and that's all you need. So to recap, the 4 criteria is volume, catalyst / PR, chart pattern, and float size. Now you can use one more thing if you're looking for certain prices of stocks. I normally trade between 50 cents and $20. Sometimes I go out of that range, but that is my most comfortable range that I've traded the most for the longest amount of time. So I will use that as well. But if you're looking for large caps, OTC stocks, the 4 criteria still applies to all of that, and it can apply for cryptos and other investments. So if you have any questions about this lesson, you need something clarified, leave it in the comments below. If you're one of our experienced traders and you've got some insights you'd like to add for the community, feel free to put that in the comments below as well. Appreciate everybody joining as always. I'm your host Ben. Stay safe out there. Until next time.